Hey, if you're watching this video, you're probably trying to learn how to trade, and I'm gonna just show you a quick little introduction of how I try to run my trades and why I come up with the analyses that I do based off the technicals that I run my trades off of. So one thing I need to do before I do anything at the beginning of the day, beginning of the week, always find the trend. I typically trade NASDAQ. NASDAQ is pretty much always bullish, and it's just been on a bull run forever, pretty much forever. But I always start off Monday. I find last week's high and last week's low. So based off of this candle, I automatically know the range that I had last week. Then I break that down into a daily range. Then from a daily range, I'm still able to see the trend. I want to follow the direction of the market. So if the market's going up, I'm going with that trend. I do not want to trade against the market. I want to trade with the market. And within this on a daily, this is a liquidity sweep right here. This is a huge order zone right here where I would see like the institutional and banks and hedge funds, like they would be buying around that zone because this is kind of like that support turn resistance broke out. We retested, grabbed liquidity from that area, and then we ripped up. So my bias on Monday, so this is Friday right here, Monday right here. My bias Monday was that we were going to continue this uptrend. And like my bias for the rest of the week was that we are going to continue the uptrend. So we break it down to the 4 hour. This is still Friday candles over here. So Monday, I still had the opportunity to be like, all right, I have another one of those zones, just like I had over here. I have it on the 4 hour right there, but it's even bigger than this one. Price goes in, buyers inject right here, right there, right there. 4 times buyers injected every time it tapped in that zone. Now I know it's a strong bullish pattern, and this was just Tuesday. Then I break it down to the 1 hour. So now that I see that price is constantly going up, I'm just trying to find these entries. So here, this would be an entry for me right here, where it wicks down. Perfect entry right there. I would have entered buys, and I did. I caught this yesterday. I kind of got a little bit swept out right here, but we ended up catching it back. All right, and around here, I would personally enter at price right here. This would be the perfect area that I would enter in. And the way you find that entry, let's break it down to 15-minute. We're still looking bullish right here. And if I could use a Fibonacci, but I'm personally just going to use a Gann box just so I could get that good ratio. This is a really good indicator to use, and it helps you find that 50% level up or down. Doesn't matter if it's going in downtrend or uptrend. You just place this. You could use a Fibonacci as well. It works the same way. I just kind of just want to see the only the 50% zone. So you see how it lines up. You can use a Fibonacci, but I just edited it out so I only have the 50 right there. So basically within this range, the way that this little tool helps is that from the last swing low to the most recent swing high, it's going to show me from that whole range where that 50% level is. And if price pulls down 50% and manages to push back up and continue, then I know that's still going to be a strong directional uptrend. And likewise on the downside, if it was to do the same thing and it went under, tested again, and then push down, that's a strong direction of an uptrend. Here, we rejected immediately, engulfing candles right there. Engulf like 1, 2, 3, 4, 5 candles. Within one candle, it just took it out. That's called an engulfing candle. That's going to signal that whichever direction it's engulfing in, that you're having strong, aggressive buyers or sellers pushing that price in that direction. But the trade that I caught today, I have this horizon marker right here. Let's just draw it like that. Well, it's going to be yellow now. And this is from this previous high. So now I know that if the market breaks up above that level and then retests it, that I should be seeing a continuation. And it also helps being a little bit farther back on the time frame. So like I like trading on the 1 hour and finding my directional moves on the 1 hour. Just because right here, if we look right here, red candle, but we got these wicks covering them big bodies. So like we're not getting these gaps like we do down here, like these big gaps. We don't over here, we don't have that. So I know that when price crosses this line and doesn't reject and we end up breaking above, I should be seeing this get cleaned out like nothing. Absolutely just light work run through. And that's what ended up happening today. We ended up having price just rip, rip, rip. And part of the plan was if it did rip through all this, that it was just gonna break all-time highs, that we're gonna catch that break and just have the run up. Because once we hit all-time highs, there's nothing holding it back besides people wanting to sell there. But it's at all-time highs. There's really no exit point except for exiting at the highs. So it's just constant back and forth of just buys, 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 and we just continued. And we're still continuing right now. But I know it's a lot. I know everything I'm saying is a lot. I'm gonna try and break it down again in different strategy, but this was just how I managed to get the moves I did. I find these big thick areas where there's just huge order areas, large time frame, small time frame. Look for these big zones, and price hits, perfect, sweeps in, sweeps out, golden. And the perfect thing about the fib would also help me catch my take profits today. This fib lines up perfectly with the zones. We retested down into here, pulled all the way up, took out that zone, perfect TP zones. And that's how you also help find a TP if you don't know, if you don't want to get out at these exit zones. The Fibonacci strategy does work majority of the time. I don't want to say all the time, but a lot of the times you're going to be hitting those TP zones, and it's just free money. Like, it's easy. You have 1, 2, 3 TPs. And just to draw that out for you so you understand what I mean, if I was to enter a trade, and let's say I entered right here, on respect of the box, I'm using the Fibonacci to show that there's signs and showing me a general direction of that retracement. I would set stop loss at least that low from that wick. And I have 3 areas to target my profits at. Profit 1, right there at the top of the swing. Profit 2, beyond the swing. Profit 3, extended, very much extended. And price is overextended right now, so it is a dangerous market for me to trade in. Like, yeah, I could just place a buy in and it's ripping up, but that's a lot of risk.